Okay, hey guys, welcome back to this channel. My name is Ronnie, and this is my
Simone.
wife.
Hello.
And if you guys are new to this channel, we talk about personal finance, tips and tricks on what we do in order for us to get ahead financially.
We have two dependents, they're 4 and 5.
And we're living in Sydney.
Yeah.
In today's video, we're going to talk about, I guess, car finance. Should you buy a car on finance or in cash? Car finance.
Well, why are we having this topic? Because lately our internet was down, and then we were watching TV. These add so many cars.
So many cars, and it's targeted.
We have it's not showing the price, so they are cheap. If they're not showing the price, they are expensive. So we go on carsale.com.au and check how much is this car.
Correct.
Or whatever car. So
whatever car, because we haven't actually looked at cars. We look at cars just for wheels, get you point A to point B.
Yeah.
We don't have a fancy car. We don't have a so we don't understand.
I think our electric bike value higher than our car.
Yeah, electric bikes is a lot more expensive than my car, probably.
Yes.
Yeah. So yeah, and we bought that brand new. Our car is second hand. So
exactly.
as a whole value. Anyway, that's not the point. The point is we've been looking at a lot of cars in the road, and I realized that a lot of them is kind of brand new, less than 10 years old, but the person that be driving it is kind of young. And from a book that we read, on an average, apparently, if in your mid-20s, you're bound to be having a car payment of whatever it was, and you will have a credit card debt of whatever it was when you're 20s.
When you start working, you
started
have to have a lot of debt because
you
realize, okay, I have this income, I can pay it off, and they just keep buying and buying. Not saying everyone, but just
average. That's just an average. There's bound to be, if you're in your 20s and you're bound to have a car payment as well as a credit card payment.
You're normal.
That's normal.
Apparently, yes.
Apparently.
I was totally not normal. No, I wasn't normal at all.
Okay, so back when I was young, on the early 20s, I did.
You did that, right?
I did that.
You were normal then?
I'm not in a sense. So if you have a car payment, apparently it's normal. But mind you, I didn't buy brand new. I bought a second-hand car. I borrowed money from the bank. It was a $5,000 loan, but I ended up having to pay back roughly about $6,000 to $7,000 over the space of 5 years. Now I didn't know what a car finance was, and then from then on, I only done it once, and I had never bought car on finance.
Learn from your mistake, right? That's your word all the time.
That's for me. I'm a lot more on street experience, like life experience. Like instead of looking at the numbers and all that jazz,
That's me.
Yeah.
I look at the number. Oh, it's risky. I'm not doing it. I'm not going to learn from my mistake. It's too much risk.
On the other hand, physically do it, and at the end it get burned, and the time.
Yeah.
And
emotion.
Is it really worth it? Comes down to it, no.
Do the numbers again. Let's do
the numbers. Let's do the numbers. So we looked at not a fancy car, with an average car of, I think it was roughly about $50,000. Because that's the one that we've been seeing on TV. 3 days with no internet, 3-4 days, somewhere around there, with no internet, and we got no choice to look at watch TV, and every single ad, there's bound to be a car ad component in it. And on an average, a brand new is about $50,000. So let's do the numbers.
Okay, the thing is, when I didn't know what's car finance involved.
I don't know, because...
No, the thing is, what's balloon? When you mention balloon period, what is that? So I did a research. Balloon period is when you finance a car, they normally have like 5-year term, but after that 5-year term, at the end, you have to pay a portion of the agreed price at the end. So you pay your monthly repayment, and you still have to pay extra at the end. It doesn't sound good to me already, but anyway, that's the balloon period. Normally, I did a research for 30% of the agreed price. That's it. So even in the 5-year, if you cannot pay for your minimum payment to the loan company, you still have to pay that balloon period, no matter what. That is a fixed price you have to pay at the end.
Whether you like it or not, you have to either refinance or pay them out.
Yes.
And some people do. We know a few people that did that. And it's not good.
Well, I think you don't have to pay balloon period if you negotiate with them with a higher monthly or weekly repayment. I think you can do it, but depends on But now when we go to car dealership, because we drove for a ride or walk past it every day, we saw these. Now they're putting weekly. How much is it a week? $150. It sounds so good, but at the end they will add on a balloon payment. Yeah, for that.
So sometimes the repayment is lower. The car is brand new, brand new, but at the same time your balloon it will be bigger at the end.
Yeah.
So that's one thing that sort of scares me. We never after I did my experience buying one car on a finance, even that alone, I actually borrowed money from the bank instead of the car dealership finance.
Okay.
Even that was like, oh, okay, but my one after 5 years it's gone. Whereas
because when I first heard about that, what's balloon? It doesn't make sense. Why after all this monthly repayment you still have to pay a balloon? Because it's just an option for you to pay less monthly repayment.
At the
I
end.
got it now, finally. After God knows how many years.
Now we never bought car on finance. As a family, as a unit, we never bought it. We bought it in cash.
Yeah.
And even that, if it's too, the way I look at it is this: a car it depreciate in value. Okay, and that would mean whatever money you put in there, you know for sure you're gonna lose the value of it.
Correct.
We don't want the money to lose in value, and we still have to pay the interest a lot more.
Correct. Well, for us, we only pay interest on something that appreciate in value.
Aside from a mortgage, we never actually pay any interest.
Yeah, correct.
Yeah, I can confidently say that.
Yes.
Like,
yes,
okay.
we don't have any debt.
We don't have any
mortgage.
payments to anyone else aside from the mortgage.
Yeah.
So.
Anyway, do the number. That's what I like it.
So
for example, this car I found.
So there's a Toyota RAV4 2020 model, and at the time that this is recorded, we're in 2020. You're looking at roughly at about $45,000. $43,500 is the advertised price. Now they're put down in here like as an example of 5 years term, paying at 5.7%. With a 30% balloon payment, so within that, so 43,000, 30% of that at the end, is that it?
Yes.
Okay, cool. So with a weekly repayment of $151.
That sounds so
per week.
cheap. $150 a week, we can afford it. Let's buy it.
So, which is what most people bound to look at that as a I guess the catching point. Like that's the hook. The fact that you're only paying $151 per week
instead of $43,500.
Correct. So now, is it really worth it on a payment?
Get a calculation. 151 times 5 years times 52 weeks that you have to pay. The repayment is 39,262. 60 plus 30% of the balloon payment at the end. 30% of the purchase price of 43,500. The balloon payment is $13,000. So all add up, the weekly repayment of 5 years plus the balloon is $52,000. All add up.
So that $43,000 car vehicle becomes 52
in 5 years.
In 5 years.
Does it sound like a good deal to you?
So it's good deal for the finance company because they were able to, you know, we give you 43, but you're gonna give back 52. But you as a user, I don't think it's a good deal as a buyer because you're buying a product that you're gonna pay 42. However, you end up paying 43. You're paying 52.
Yeah,
that's nearly 10 grand on top.
Yeah. So and in the 5 years, you actually per year you're paying $1,700 extra a year on the car, which means for us we rather use that money for a holiday or put it in invest.
Go to a restaurant. Go to like dining out.
Yeah.
If you want to.
Even use splurge yourself like $300.
Yeah.
Dine in a restaurant and then the rest put it in investment. Would it be better off?
Apparently, on an average takeout apps these days, people spend roughly about $2,000 per year. Why would I want to spend it on a car that does not give me any? Well, for me, a car is a car. It does.
I think it's the pride. You know, you're driving a nice car, you made it. You know, it's the social media effect.
It's the pride.
Yeah.
You think that? Like for me, it's like I'd rather have no payments. I don't care what people think, because they're not paying my bills.
Yeah.
So I'll screenshot what the car looked like somewhere around here. So if I remember. And yeah, like I look at it. There's no point. Why would I want to have that pride of having a payment?
Yeah.
I'd rather have a pride that I don't have to go to work.
Yeah.
So
We're not normal.
I guess so. I mean, if you want to become, I guess, receiving multiple stream of income, you have to be.
You have to do what it's supposed to be. It's simple, but
Yeah.
it's just nowadays it sounds very difficult or hard. But it's simple.
Not. It's not hard. It's just you have to think of every time you're going to spend on something. Is it going to give you more money back, or is it taking more money out from you? Anyway, that's our 2 cents based on a car payment. Should you finance a car or pay in cash? We pay in cash, and if we can't pay in cash, we won't go to that level of car.
Yeah.
If we have $10,000 to spend on a vehicle, we look at something that is $8,000 because it would get chewed up with all your administration, registration, all that stuff. We don't look at, we've got $10,000, we're looking at something at 15. There's no point. So we don't want to be paying anyone.
Yes, exactly.
Hopefully this will help you guys deciding if you guys think you're buying a car, brand new, or in cash, or in finance.
It's your choice.
See you guys.
Bye.
Bye.